Can you take counter trend setups against the higher time frame? All right. Meaning if we're in a bearish market and the market is moving lower, breaking structure, and it's making, say, for example, new lows on the day. Is there a way to actually trade against the higher time frame on a pullback? I would say definitely so, yes. And I do this, even in my own trading. I've talked about it, not so much in videos because I don't stress counter trend trading, but I've posted screenshots of trades that I've taken where I've taken them against, say, for example, the higher base chart in the past. Now, I'm going to show you how you can properly do this, all right? And I'm not recommending to anybody out there who's a beginner trader, counter trend trading, I would say stay away from until you get the experience of just simply looking for the most higher probability setups, the ones that actually are going to stand out, key areas of supply and demand. This strategy, what I'm going to show you about counter trend trading, where the market is moving in one direction on a higher time frame, and then you're looking for a pullback against the higher time frame direction. So for example, if the market is bearish and we're looking for an opportunity to buy going long on a lower time frame. So I'm going to show you this today as far as what we're looking for and how to go about looking for a setup to take a trade. Now, if the market is bearish, for example, like here, okay, this is the 120 range chart. It's a higher base chart, and we're breaking structure to the downside. Okay, as you can see, we got push, pull back, broke through a major area structure to the downside here, which means these lows right here, and then it continues pushing lower. Now, what we're looking for is where the market is, making lows, okay, and with this aggressive selling there. So, for example, right here, the market pushed down, pull back, aggressive selling, leaving gaps right here, okay? So basically, areas that need to be filled, fair value gaps within the market, back up to the upside, all right? Now, the market's going to do what it wants to do. It can react anywhere. So we just don't want to take a trade the moment we see, okay, the market's selling off right here. We got aggressive selling. And then, we're looking, okay, it could be a pivot area. It could be a round number, a half number, whatever it may be. And then you get into a trade going long. You don't want to do that. What I'm specifically trying to identify here is where the market is made an aggressive move to the downside and made a new low for one. So this was on July the 17th at 10:15. Again, July 17th, okay, around 10:15. Now, this is on the higher base chart. What we want to do is kind of similar to the same thing that I like to do as far as using multi-chart confluence, looking for a market up a setup on a higher base chart and scaling down to a lower base chart. In this case here, we're looking for a new low to be created off of a bearish move to the downside where it's made a new low. Now, what you can do is say, okay, when the market has made a new low, that doesn't guarantee it's going to continue pushing, or have rejection here, push up, or continue pushing to the downside. Trading's all about looking for what the market's going to do next, okay, based on setups within the market. So if we made a new low with this aggressive selling right here, what I like to do, at some point you can say, all right, especially if I'm going to show you one thing we have of these gaps right here. We know that the market at all times has to mirror itself and kind of turn back around and at some point fill in the gaps that are left behind, right? It has to do that. What also increases my interest in the market, especially if we have, like, say, for example, this was a supply area here. This is low probability low probability supply. Now, if this was a high probability supply area where there's a gap back up right here, what I would do was scale down, especially if we've been bearish for a period of time and we continue to make new lows. Especially if there is a high probability setup, okay, where there's aggressive selling that took place, and let's say, for example, this was a supply area, which it is, but it's low probability here. But let's take the low probability piece out the picture and just look at it for what it is if it was a high probability setup. Plus we have, gaps right here, okay? So if this was a high probability setup to where there was a gap left back at the supply zone right here, I'm going to show you because people may be asking that don't know or know how to draw supply zones or still learning. Let's say there was a gap right here from the bottom portion of the wick of this this bullish candle from where it broke lower, and it never came back to that bottom portion of the wick of that bullish candle. Now, we would have aggressive selling right here. What I like to do at that point, because I know the market every time it makes a pretty much a big push in either direction, if it's trending to the upside or the downside, in this case here it's to the downside, it's got to retrace some, okay? All right, because the market moves, it ebbs and flows, right? It just doesn't smack down, keep down, 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 down. And unless there's like some major news going on, or basically major news where it's just pushing hard, 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 and it doesn't stop. Some days we'll see that where the market it's just trending hard in one direction, and we get slight pullbacks. But the market is going to pull back some, at some point, especially after it's, say for example, made a swing here, and it's pushed down here, and with all this aggressive selling, it's got a pull back. Okay, that's how they get people into trades. That's how they set up traps for sellers or retail traders. So understand that the market is always going to move in ebbs and flows. All right. So we're going to get pullbacks. We never know how big they're going to actually be. But again, trading is about high probability, interest, and understanding those areas within the market that where we can take trades from. In this case here, again, this was a aggressive selling to the downside right here. So what you could do is move down to a lower base chart, the 24 range chart, say for example, and look for a demand setup, okay? Because if this was a high probability supply area here, it's low probability. But the thing that I'm saying also take a look at here is that we got gaps back here within the market, here, here, and back up to here, right? These bullish candles are creating gaps. These bullish candles. Sorry about that, guys. These bearish candles are creating gaps to the downside, so the market has to come back and fill those areas in 100%, not immediately, but at some point it's going to fill in every gap, for every gap or gap back up to the upside here. And let's just say that this was, again, a high probability supply setup right here. Now, if we're down here at this low, I would be interested for the market to come back, fill these gaps, and tap into the high probability supply area and continue running lower. Now, what we see take place right here is basically the market did create this low off this bearish move to the downside, and it came back and filled this gap right here. Most instances, if we have a high probability area right here back at a zone, okay, it's going to come back and fill in back to the supply area, okay, because there was aggressive selling that came out of this area, but because we got, this is the area where out of the swing where it started at and came from, it pulled back right here. What you'll see a lot of times is it made it come back and test one of these gaps right here, okay, and just push down because it's already tested that supply area there, so it's low probability. But again, if this was a high probability supply area here, I would take interest for one, all right, and after we made this low right here, and knowing the market is going to pull back, okay, how much don't know, but if it's a high probability setup, probably going to pull back to every bit back up to this area right here, okay. All right, if it was high probability, and again, we're looking at it as if it was high probability. Now, another thing we can also keep in mind open on, or eyes open on, or the fact is that the yellow VWAP line you see right here, we are trailing underneath it, okay, and we got a distance from it. That's primarily what you kind of want to see. If the market is in a strong movement or direction to the downside, that VWAP, or that evaluated average price indicator, is going to be, tucked back to the upside some. All right. And so as long as it's there and we're not like riding that line, okay, because once it gets there, the market kind of could go into a consolidation move if it's pulling back to some area, say for example, and you're looking for a setup right where the VWAP may be cutting through or kind of in the middle of a supply or demand area. Be careful about those trade setups. Like up in here, you see how that's running flat right there? All right, be careful. We want to see the market just continue making ebbs and flows to the downside and that VWAP being above and not cutting through any particular support. Not support, but supply or demand zone or area, okay? So in this case here, if this was a high probability zone right here where we had a gap at and we had these gaps right here, aggressive selling to the downside, then we're looking for, the market to have some reaction at a low that it made, okay, after it made a decent move. Now we're going to move down to the lower time frame, the 24 range chart, and I'm going to show you what I'm talking about. But first and foremost, okay, that's it right here. This is the same area right here, all right, that is right here on the 120. So on the 24 range chart, once we've made that low, and let's say on the 120 range chart, this was a high probability zone. We're talking about back up here to about 205.5, okay? I'm treating it as the same way I would trade a regular supply and demand setup in a sense, okay? Once I'm down to the 24 range chart, the lower based chart, okay, or lower time frame if you trade time based charts, I'm looking for the market to create a structural break to the upside. Look what it did here. It made that low here. What is this? 20,097 and a half. Let's see if that's correct. 20,097. Okay. So it's that area right there. I'm looking for the market on the lower base 24 range chart to break structure. You see what it does right here when it pushes up? We've got aggressive buying, pulls back, boom, break structure above this area right here. Okay. Now, what does it leave right here? We got aggressive buying right here. There is a high probability demand zone right here. And that's what I'm looking for. A break of structure to be created on the higher base chart, moving on a pullback, okay? On a pullback against the higher base chart. So it's bearish on the higher base, okay, 120 range chart. But I know the market's it's got to pull back, okay? Especially where it's got those gaps on the higher base chart, and if that was a higher probability supply area on the 120, we're definitely going to get a decent pullback. So then I'm just looking for, again, if the market is moving into one direction to the downside, bearish on the higher base chart, I'm looking for a pullback opportunity to happen to where maybe it's going to come back, fill some of those gaps in, all right, and maybe if that was a high probability zone, move all the way back to the on a pullback back to the high probability zone that formed on the higher base chart. So all I'm going to do is move down to my lower base chart like I do in most of my trades and look for a structure break right above this area here. When it breaks that, and I'm looking for a demand setup. Now, we're bearish on the higher base chart, but I'm looking for a bullish demand setup on the lower base chart to take the market back up on a pullback to a supply area on the higher base chart. Hopefully that makes sense, okay? All right? Because the market's got to, it moves in ebbs and flows, all right? If it's making a new low where there was aggressive selling, it's going to have some kind of pullback on the lower base chart, all right? So we get the break of structure above here at, say, 20,124, pulls back, demand area right here, look for the break and the close of the candle, and boom, take the trade, okay? So then where do you place your stop at? All right, place your stop right here. Stop goes below this area here. We get the break and close the candle above, go long, aim for liquidity right here. So maybe you got in somewhere around 30, 20,130, took it up to 20,142 to run the highs up here. But also take a look, like I always talk about, to the left-hand side of the chart. There are gaps right here. So I would aim for liquidity to be taken out here. All right. That's the most recent high on the pullback on the lower base chart to demand for to fill these gaps in right here to the left-hand side of the chart as well. So maybe you got a couple of contracts right in here. Cancel those out, close those out, take your profit, let a runner run, and then from 142, say for example, it's going to come up here and maybe fill the rest of these, let's see, these gaps back up to this. Let's see. There's definitely from here to here, so that's 152. So at least another 10-point pickup right there, all right? So that's you know, we're talking about 12 plus 10. That's about 20 points, 22 points. You should be able to pick up pretty easy on that trade right there. Again, we are taking a trade, which is counter trend trading against the higher time frame, all right? Using a lower time frame setup based on a supply setup where we get a break of structure and a pullback. Hopefully that makes sense, okay? Just take a look at it and look for opportunities like that, okay? Especially, it works best when we are definitely in the in a trending market to where the market continues to make bearish movement to the downside or bullish movement to the upside, where it has a significant, in this case here on the higher base chart, where it's broke structure to the downside, okay, and we got a nice supply setup resting above where there was let's go back to it, where there was bearish movement right here. So this was a high probability supply area, and there was bearish movement right here where there's gaps back up at. Once it made this low, look for something to happen on the lower base chart for a pullback, okay? Now, again, keep in mind, we're still bearish though. We're just looking for a quick pullback on the lower base chart, possibly back up to a higher base supply area, okay? That makes sense. Anyways, that's what I want to share with you guys today, because you can, if you know how to counter trend trade correctly, do it the right way, okay? Don't take every counter trend trade setup. I'm definitely saying, if you do take interest in doing this, make sure you have got identify a key area where there was a significant low made, and above it there was aggressive selling. I mean, a decent amount of aggressive selling, and there was a high probability supply area or demand area resting above or below, and then move down to a lower base chart to look for a nice demand or supply setup. That's what I want to share with you guys, okay? Hopefully it makes sense. Outside of that, if you're a first-time viewer here on the channel, take the time, go ahead and smack that, click that subscribe button today to become part of the community. Make sure to turn your post notifications on so you don't miss one of the uploads here on the channel. Anyone and everyone who's interested in joining the elite membership for only $6.99 a month, that's where you get the trade breakdowns where I go in detail, great detail about the trade setups that I take, ones that I post over in Discord. I'm going to do a new trade breakdown video here soon. Going or covering a couple of trades that I've taken, because these are trades that I post over in Discord because people find value in them, lots of value in them, because it opens their eyes up to see how the strategy comes together and how it actually works. I go through it as if like you're sitting next to me and I'm talking to you about the trade setup, what I was thinking, why I took that trade, where would I place my stop loss, where would I place my profit target, and things of that nature, okay? So if you want the full rundown of the trades, I would highly recommend, if you're interested in becoming an elite member. The link to become an elite member is down below in the description. Just scroll down below in the video. You'll see two links. The first one will be the Discord. The Discord is free if you choose to join. The second link right underneath that is the link to become an elite member, okay? It'll say become an elite member. Click on that. 2 tiers will pop up or appear. Make sure to choose the one for $6.99 so you can gain access to the trade breakdowns, the video playlist links, and also other content that I actually published to the private community for those that are elite members. I did a great video on market structure, so that's there as well. So anyone interested to become an elite member, the link is down in the description portion of the video. I keep saying that because people always DM me asking me how they can become an elite member, all right? I appreciate everyone tuning in on the daily. Take care. If you found value in today's video, guys, please click the like button for me. It definitely helps the community out. It helps the channel out to get this great, valuable information out to other people so they can become prosperous as well. Help other people. That's what it's all about, and that's what I'm trying to do here, is to show people a profitable way to be able to make money within the markets. Take care. Trade safe. See you in the next one.